It begins subtly, almost imperceptibly. Global media reports highlight China's rapid growth, technological breakthroughs, and expanding geopolitical influence. At first, the US perceives these developments as manageable challenges. Economists analyze GDP growth, trade patterns, and technological competitiveness. Military strategists monitor regional maneuvers. Yet, over years and decades, the balance of power begins to tilt decisively. The first visible signs emerge in economics. China's economy surpasses the US in nominal GDP, exports, and global financial influence. Its manufacturing dominance solidifies across critical industries, from electronics and rare earths to renewable energy and pharmaceuticals. International companies increasingly rely on Chinese markets and supply chains. US corporations face growing competition and declining global market share. Investor sentiment reflects a shift in confidence, with capital increasingly flowing toward Asia-Pacific growth hubs. Wall Street reacts cautiously but decisively. Markets adjust to the recognition that the US dollar may no longer hold unquestioned global supremacy. Central banks around the world diversify reserves into Chinese yuan or alternative assets. US Treasury bonds, once seen as the ultimate safe haven, experience slower demand and higher yields. The strength of the dollar wanes, making imports more expensive and fueling inflationary pressures domestically. The US consumer, accustomed to low-cost goods and stable prices, confronts new economic realities. Trade dynamics shift dramatically. China leverages its economic clout to secure favorable trade agreements, resource access, and influence over developing nations. US trade deficits widen as Chinese exports dominate international markets. Supply chains increasingly bypass American intermediaries, reducing US influence over global manufacturing and logistics. Strategic materials, from rare earth minerals to semiconductors, become points of leverage. American industries dependent on these inputs face higher costs and reduced flexibility. Technological leadership experiences unprecedented pressure. Chinese companies achieve breakthroughs in artificial intelligence, quantum computing, 5G and 6G networks, electric vehicles, and biotechnology. Intellectual property becomes both a competitive battleground and a strategic asset. US tech giants, once unchallenged, encounter growing competition at home and abroad. Talent migration shifts, with researchers, engineers, and entrepreneurs increasingly drawn to Chinese innovation hubs, drawn by funding, infrastructure, and policy incentives. The US military and geopolitical posture are profoundly affected. China's defense modernization, expanding navy, and strategic partnerships in Asia, Africa, and Latin America challenge traditional US dominance. Military planners face new strategic calculations. Force projection is limited, alliances must adapt, and global hotspots become increasingly contested. Regions once considered secure under US protection now look to China for influence, funding, and security guarantees. America's capacity to shape global conflict, deter aggression, or enforce norms diminishes. Diplomatic influence declines. International organizations, from the United Nations to financial institutions, increasingly accommodate Chinese initiatives. Multilateral agreements reflect Chinese priorities. US leadership is often advisory rather than directive. Global norms, trade regulations, and development strategies evolve under Beijing's guidance. Traditional US allies recalibrate relationships, balancing historical ties with the pragmatic recognition of China's growing power. Financial markets undergo systemic transformation. Investors recognize the shift in global economic leadership, reallocating portfolios, investing in Chinese equities, bonds, and infrastructure projects. Emerging markets increasingly tie economic planning to China rather than the US. The flow of global capital, once dominated by New York and Wall Street, shifts towards Shanghai, Shenzhen, and Hong Kong. Financial intermediaries, investment banks, and hedge funds adapt to a new center of gravity in global finance. Consumer behavior in the US begins to change. Dependence on Chinese imports increases as domestic manufacturing struggles to compete on cost and scale. Prices rise for consumer goods previously inexpensive, while availability of certain products fluctuates due to geopolitical tensions. Public perception of economic security is challenged. Retirement savings, corporate investments, and household budgets are increasingly sensitive to global instability. Americans begin to reassess spending, saving, and investment priorities. Energy and resource geopolitics are profoundly affected. China secures access to oil, gas, rare earth elements, and renewable energy resources through strategic investments and partnerships. U.S. energy independence remains, but global energy pricing is increasingly influenced by Chinese-led initiatives. Geopolitical leverage shifts. Nations with resource dependencies align their policies with Beijing, reshaping international agreements and pricing mechanisms. U.S. influence in the Middle East, Africa, and South America diminishes. Global supply chains become more China-centric. Manufacturing, logistics, and technology production are increasingly anchored in Asia-Pacific hubs. U.S.-based companies face higher transportation costs, longer lead times, and increased dependence on Chinese intermediaries. Strategic industries, including defense, electronics, and pharmaceuticals, confront vulnerabilities as production is concentrated abroad. Reshoring efforts encounter financial, logistical, and policy challenges, slowing the transition towards self-reliance. The U.S. labor market adjusts under these pressures. Certain industries, particularly manufacturing, experience job losses or wage suppression due to competition with China. High-tech sectors face talent drain as researchers pursue opportunities in China. Service industries adapt to changing consumer behavior and global trade patterns. Workforce retraining programs become critical to maintain employment levels and competitiveness. Yet gaps persist as new skill requirements outpace domestic training capacity. Political consequences are profound. Domestic debates over foreign policy, trade, defense, and technology dominate legislative and electoral discourse. Populism, nationalism, and protectionism gain momentum as citizens react to perceived decline. Policymakers are pressured to respond with tariffs, subsidies, or strategic investments, yet solutions are constrained by economic interdependence and global realities. Governance becomes increasingly focused on mitigating decline rather than asserting dominance. Innovation ecosystems evolve. Chinese leadership in critical technology sectors attracts global talent and investment, accelerating breakthroughs. U.S. innovation slows relative to China due to talent migration, funding limitations, and risk aversion. Universities, research institutes, and private companies adjust collaborations to include Chinese partners, increasing knowledge exchange but shifting influence. Intellectual property protections and licensing agreements become critical strategic tools for maintaining competitiveness. Military alliances and strategic partnerships adapt. NATO, ASEAN, and Pacific partnerships recalibrate in response to China's rising power. U.S. bases, deployments, and operational influence are reviewed. Regional conflicts, trade disputes, and diplomatic negotiations increasingly involve Chinese leadership as a central arbiter. U.S. capacity to project power is more selective, focused on immediate interests rather than global leadership. Financial systems experience profound transformation. Central banks diversify reserves, favoring Chinese yuan or alternative currencies. Trade finance, investment flows, and foreign direct investment increasingly bypass U.S. institutions. Dollar dominance declines, affecting borrowing costs, international contracts, and monetary policy effectiveness. American financial institutions adapt, but face diminished global influence and revenue opportunities. The stock market undergoes volatility and sectoral shifts. Companies with strong ties to Chinese markets benefit, while U.S.-centric exporters struggle. Technology, manufacturing, and consumer sectors experience re-evaluation of growth prospects. Investors reassess risk, factoring in geopolitical exposure and global supply chain dependencies. Long-term indices reflect a structural rebalancing of global economic power. Education and workforce development adapt. STEM education, international exchange programs, and research funding increasingly consider Chinese leadership in key fields. U.S. universities face competition for talent and resources, adjusting curricula and partnerships to remain relevant in a shifting global landscape. Talent pipelines realign with international opportunities, affecting domestic innovation capacity. Global conflict risk changes. Military balance, economic leverage, and diplomatic influence shift toward China. Regional tensions in the South China Sea, Taiwan Strait, and border areas become more pronounced. U.S. strategic options narrow, relying on alliances and selective engagement rather than unilateral action. The global security environment reflects a multipolar dynamic with China as a central actor. Technology adoption patterns evolve. Chinese innovations in AI, 5G, renewable energy, and manufacturing efficiency set global standards. U.S. firms adapt to competitive pressures, often adopting technologies developed abroad. Standardization, regulation, and intellectual property frameworks increasingly reflect Chinese priorities, influencing global technology trajectories. Cultural and soft power influence changes. Media, education, entertainment, and diplomacy increasingly reflect Chinese perspectives and narratives. U.S. cultural exports face competition, while Chinese media, technology, and infrastructure initiatives expand reach. Public diplomacy, cultural exchange programs, and international collaborations adapt to a new balance of influence. The global economy experiences long-term rebalancing. Investment flows, trade patterns, currency reserves, and manufacturing hubs increasingly center on China. U.S. influence over international economic policy diminishes. Recovery and adaptation require strategic investments, domestic innovation, and selective international engagement to maintain competitiveness. The U.S. population faces economic and social adjustments. Household incomes, retirement planning, and job opportunities adapt to a new global reality. Industries realign, skill development becomes essential, and societal expectations shift. Public awareness of global interdependence grows, influencing civic engagement, political priorities, and personal financial decisions. Geopolitical landscapes continue to evolve. Alliances, partnerships, and conflict dynamics are increasingly shaped by China's global strategy. Resource distribution, trade negotiations, and diplomatic engagements reflect multipolar realities. U.S. policymakers recalibrate priorities, emphasizing resilience, competitiveness, and strategic partnerships. Over decades, the U.S. adjusts to a new role. While no longer the unchallenged superpower, it maintains regional influence, technological capacity, and economic strength. Adaptation focuses on innovation, strategic alliances, and domestic competitiveness. Global power is shared, requiring nuanced diplomacy, economic strategy, and military planning. Ultimately, the loss of global supremacy reshapes every dimension of American life. Economics, politics, technology, military strategy, and culture are recalibrated. The world transitions from US-led unipolarity to multipolarity, with China as a central actor. The scenario illustrates the fragility of dominance, the importance of adaptation, and the interconnectedness of global systems. The story of America's potential decline in global power is a lesson in strategic foresight, economic resilience, and diplomatic agility. It demonstrates that influence is maintained not only through strength, but through innovation, alliances, and the ability to anticipate and adapt to shifting global dynamics. The consequences are profound, systemic, and enduring, reshaping international relations, markets, and societal structures for generations.